Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. We're at 72.23. We're just lunging around here. Show me the chart.
Yeah, 72.23. That's actually a drop from the week before. And, we were talking last week. You and I were both sort of under the impression that we had seen the low in supply and we'd start to tick up. But here we are, another tiny drop of 1.5% from the week before. So that's interesting. I think it may be an off market thing, but I think we're going to see more to come.
Yeah, I think we'll see more to come, but this is bizarro world. We should be rising at this point in time. I guess the listing season, we're in the listing season, but it's just not kind of taken off like we kind of expected it to. So let's just see what happens. Moving on to demand, I'm seeing pending sales at 3339. Johnny, show me the chart.
And it's the same as last week. It's about 2% from the week before. And, one of the things we talked about again last week is just looking at this on a year over year basis. And that's up, these pending sales are up 35% compared to where we were last year at this time, which is we're going to get to this again when we talk about weekly contract signs. But, this market is showing a lot of strength here.
Yeah, I agree with that. It's showing a lot of strength. And with that, let's move to the weeklies and let's see that strength. I'm looking at weekly supply. We're coming in at 332. John, is that good or bad? I expected higher, but show me the chart.
Well, I don't know if it's good or bad. I mean, it's up. What's interesting though, it's up 8% or so from the week before. But when you look at that overall supply number that we just talked about a minute ago, which is down, you got to try to wonder, why is weekly new actives up so much, but overall supply is down? And that's because, as we're going to get to in a second, weekly new contracts are just going gangbusters. And also we saw a lot of off markets.
Yeah, and let's just go to weekly contract sign. They're coming in at 260. Go Manhattan Real Estate. Good job, agents. That is an unbelievable number. I love it. It's on the rise. I mean, could we get to 300? That would be quite something. But Johnny, show me the chart.
It would be something if we could see 300. It's not out of the realm of possibility at this point anymore with 260. And again, the most pertinent takeaway you could take here is 27% compared to where we were last year. So we are just doing an incredible amount of volume compared to a typical early February week.
Yeah, the market is active. Not as much stuff coming on, more stuff going to contract than expected. And as John mentioned, we got to keep an eye on this. This is off market. That is up big. We did look at this number. It was a big number on February 1st of off markets, about over 100. It seemed like it was real. We checked it. There was nothing abnormal about it. Maybe just a purge day. But that is pressuring why supply is not going up for right now. So if you're a buyer out there, you're probably wondering where's the stuff? It's not coming on, and that's what the data shows.
Yep.
So very interesting. All right, we got a special treat, John. We're going to go to cap rates. We're going to look at cap rates. We're going to look at Manhattan cap rates. I'm getting excited over here. Sit back, get a cup of Joe, and just listen to this for a second, because this is good stuff. For those of you that do not know, a cap rate is a measure of, value, a measure of risk, the capitalization rate. It's a lot of how commercial mixed-use property is valued. And we don't often delve into this, all right? And I just want to talk about this. The way we get the cap rate, okay, it's found by dividing the net operating income of the property by the cost of the property, okay? We base that on median asking rents, okay, median sale prices, and we're taking into account median CCs and taxes for all of this analysis that we're doing. We are looking at all rented and lease signed, but we're not taking into account lease signed rates or concessions. I just want to be very, very clear about that, because we don't have that data. Yep. We have what we have, and we dug deep into this. And John, first off, the cap rates are extremely low. The only one I see over 3% is the Upper East Side. And I look at the rest of this, it's really between 1% and 2%, which is very low, which makes you think that either the market's very strong or there's very low risk. So it's confusing when you look at the market, and we're saying this market's kind of down from COVID, even though we're coming back. This is strange. So John, what do you see here?
Yeah, well, no, I think you mentioned it earlier, and I'd like to just reiterate the point that these are basically asking cap rates. So these are as good as it gets, because we're not taking out any of the other expenses that might drag these down a little bit, may possibly even make some negative if you're looking at, hefty costs. But, typically a cap rate is low because the market is improving, and it's a low risk low reward structure in which your rents are stable and your property price is increasing. And that's what brings your cap rate down, because you're paying more for the property. Here, what happened when we look at Manhattan, what happened is that the rents got absolutely crushed from the pandemic. They were down 20% in some places. So
Right.
sales prices are sort of going sideways, but when you take those rents and you decimate them by 20% or so, your cap rates went from, say, if you're lucky, in the fives to maybe 1/2%. So they're really getting crushed.
Yeah, and this is that chart showing you. We showed you guys this a few weeks ago, and of course, this is the rental market. This is the rental market. This is the rental market. This is the rental market, and the rental rates were going a different way. And as a result, this is why those cap rates are going down. It's a crazy environment, but this is what is going on. And when I break it down, okay, John, you did a great analysis here. Thank you so much. This is a 5-year chart, and we're going to break it down by beds. And the colors that you're seeing on this chart are different neighborhoods. Okay, so this is the studio one, and all of them are going to show you the exact same kind of thing. The cap rate's basically going down over the last 5 years, and it's just an interesting thing to see on every single one. Here's 1 bedrooms, John.
Yep.
Here's 2 bedrooms. Okay, and all of them 2 to 3%, 2-3%, 1-2%. That's where the cap rates are. I mean, are you going to expect this to turn around first as a sign that the sales market's going to really go into hyperdrive and come back in recovery, or what's your interpretation here?
Well, it's interesting because they all sort of turn really sharply negative right toward the end, which is basically based on COVID. And as we were just discussing a minute or so ago, it's really due to recent rent reductions that are kind of crushing this. So
Right.
what's interesting is if you sort of step back and think, well, why are they down? If they're down because rents are down, if there's a recovery in rents, if rents go back to, say, 2015 levels, your yields that you're getting from your investment property, and these, by the way, are all based on condos, so
Right.
your yield could triple. You could go from a 1% yield, suddenly you're looking at a 5% yield if rents come back.
Right.
And it's interesting from a value perspective, because perhaps maybe for the first time in a while, there might be some value here for investors, because as we've seen, the sales market is sort of stabilizing in terms of prices. So if we're not bottoming out in the sales market and there's upside on the rentals, the rental income, that could be interesting.
Yeah, and that's the key. That's the key. Is I think the sales prices, John, have come back. We're not going to have proof on this data for about another, I would say, 5-6 months minimum. First, we got to see the bad data from COVID come through. Then we're going to show the recovery. But I can't imagine that the prices didn't rebound a little. And it's those rents. And that's why we keep saying that we're focusing on that rental market. We're looking at that rental market, because when that rental market starts to turn around, turn the corner and come back, the sales market's going to have another trigger to kind of give it a little boost behind it, especially from the investment side. So very good stuff. Thank you, John. I am Noah Rosenblatt. We're both from UrbanDigs. This has been your Friday Manhattan Market Update. Have a great weekend, and we'll catch you next time.